Hey guys, hey YouTube, hey Collector's Dream. How are you doing? Thank you for being here this early. Well, it's not really early, it's 9 o'clock. All right, I just woke up. I haven't looked at the markets yet. I was up late working on trying to tame my AI agents. We're misbehaving. All right, let's see what's going on with the market. I like to get up and check it out with you guys live every day. Lots of days I have on CNBC, and I'm watching what's going on. Man, that's incredible. Look at this. It's making a new high right now. So the thing is, it's the longer it holds it, the more legitimate it is. We'll see. We'll see how long the price stays above 60.75, which is where the old short-term high was. Anyway, that's great. Let's look at SPY. You guys don't care about ES. ES moves SPY, but it's like which came first, the chicken or the egg, ES or SPY. I mean, SPY's the granddaddy, but SPY is just an index. What really moves SPY is each of the constituents in SPY moving. That moves the index. Boy, this was in the SPY, we had a great bullish gap between last Friday, the 6th, and Monday, the 9th. Prices have returned there 3 times, and they've been in all 3 times so far. It's been a great place to buy. So let's look at the Qs. Come on, Qs. Why are you so slow this morning? I'm on the good Wi-Fi. Yeah, I'm on the good Wi-Fi, not the bad Wi-Fi. You don't want to be on the bad Wi-Fi. I'm on the good Wi-Fi. I have the Wi-Fi extender, although that goes with the bad Wi-Fi. So that doesn't help me when I'm on the good Wi-Fi. Well, I'm just trying to show a chart. For some reason, this is acting real goofy today. Anyway, all right, that's fine. So Qs look good. The 10-year, I'm not going to click on it because everything's so slow, but it's under 4.5. That's all we care about. Look at AM freaking D. Gosh darn it, how do I not have any AMD? And I know the reason is because I got mad at AMD when it dropped 50% in a freaking 2 weeks. Or I got mad at AMD when it dropped 50% in 2 weeks. But man, what a turnaround this has been, huh? Let's look at a daily chart of AMD. Yeah, now I'm remembering why I dumped AMD. Now it's coming back to me. It's like a memory that I've suppressed. Yeah. Oh my gosh, look at that. It dropped more than half. It went from above 150 to 80. I mean, that's crazy. That's just this year. It started at 120, I guess, and went down to 80. And now it's bounced back to 120. All right. ARK is up today. Ethan was asking me about OARK last night, and I don't know. I've never really, OARK's really one that I haven't ever covered. I don't know that much about ARK. I'm not a huge Kathy Wood person, but she does have some AI investments and stuff. So if the market's, doing well, I mean, ARK should be doing well too. But anyway, and obviously it's doing well today. Coinbase is up 3%. Of course, on a day when the market's up 2%, Coinbase being up 3% is nothing. It's supposed to be up that much, right? It probably has 50% more volatility than the market at least. So anyway, look at the NASDAQ up 2.3%. It just didn't look like it was that much on the chart, but 2.3%, my Lord. You know what tipped us off on this, if you had a futures account, is stock index futures gap last night. Made a bullish gap. And I think they even returned to the gap once Probably. Let's see. Let's get the 30-minute chart on to look at gaps. But they did. You just have to take my word for it. I put it on the chart last night. I had a show last night. Did you guys see my show last night? Had a couple of shows yesterday. Not much of a gap, and they didn't return to it. It's right there, but there was a gap. Let's look at. Maybe I put it on the ES chart. I know I put it on the chart. Am I just imagining that? Maybe it's on a different profile. Sometimes I have different profiles of these open. Anyway, you could barely. There it is. I'm vindicated. I am vindicated. But anyway, gaps are bullish pressure. A bullish gap is bullish pressure. So it's putting pressure on it, even if it doesn't return to it. But if it does return to it, lots of times it's a decent place to take a shot at in the direction of the trend, whichever way that is. All right. Let's look at Bitcoin. Bitcoin's up 1%. Boy, everything's just doing great today. Why can't everything just be up 1% every day? I mean, wouldn't that be great? Or 0.5%. I would take 0.5% every day. Things could just be up 0.5% every day. I would never gripe. Market's up 0.5% every day. What does that come out to? Like 100% a year or something? So there's 220 days in a year. Yeah. So it's like it's double your money every year if the market's up 0.5% every day. All right. All right. Let's see what else we get ourselves in the middle of. You guys have any? There may be one or two earnings trades you want to look at. There's a few stocks that have earnings. If there's any request for an earnings trade, just let me know. Or it doesn't have to be an earnings trade. If you want me to show you how to put a trade on and try to find you some convexity or some asymmetry. I'm always looking for, or I'm not always. Lots of times I'm looking for convexity or asymmetry in a trade, but sometimes just income. Sometimes you can get income and I don't know about it, asymmetry and income, but anyway, all right. So here we have the max factor. This is a high yield technical analysis. What this is and what this sheet tells us, we just from left to right, we have the price of MSFY. It happens to be the number one stock on the report right now, but trailing 12-month dividend, $3.50. This is short-term momentum. That is medium-term momentum, meaning it's above the 20-day moving average and above the 50-day moving average. I don't use the 200 anymore. I used to use the 200 as part of the max factor, but then all these things have to be around a year before they can be in it. Now we just have to have them around a quarter. So before we can put them in there. I put one in yesterday that hadn't been around a quarter yet, but I put it in anyway because everyone loves it. I forget what it was, something from Round Hill. But it's close to a quarter. Anyway, but we just go across. It shows the average true range of the stock, percentage of, and that's just a calculation. Then it shows the risk factor, which is the stock's beta. Then it shows the Holy Grail. That's a proprietary indicator. But we could just use the Holy Grail indicator. That's another story. But anyway. But all it is the total return for the past quarter. So MSFY is up 12% in the past quarter, total return. Paid a decent dividend. Anyway, the max factor looks at the factors and tries to give you what it considers as a good mix of risk and reward. So anyway, MSFY is number one, NFLP is number two, PLTW number three, GPTY. You gotta love GPT freaking Y being number four. I don't know why it wasn't on the list. It's one of my favorite funds, and I just hadn't had it on the list. And but of course I have it, and then I put it on the list. Of course, it's right near the top where it should be. And we have Maggie in Fly. You can see the Netflix. I think Netflix just may be a good stock for option selling because. Because three of their constituents, or because their constituents are always near the top. Lately, the Microsoft constituents are both in the top 10 too. MSFO and MSFY are up there. But anyway, all right. Maxi, then we have Chippy. NVDW, TSLP, iGold, GDXY, and GLDI all right together in their Carvani. But anyway, that's the high yield technical analysis. You could just do it this way. Just use the Holy Grail factor, which is I don't think anyone else's spreadsheet computes it, but you could also just look at this, and you could do this yourself. Forget about my stupid metrics. Forget about the good mix of risk and reward. Just go for reward. The Holy Grail factor is all reward. So let's sort by the Holy Grail factor. And I'll show you how to do this, and you could do this yourself. Somehow it's not doing it. Maybe A to Z. Okay, that's backwards. Short Z to A. Well, I don't know. It should put the highest numbers at the top, and it's 9, 9, 8, 6. So that's great. But then there's this one right here that's 48. Anyway, you can do this yourself. Let me show you where to do this. If you were just looking at total return, that 48 would be tempting. Let's see. So go to FinViz. Oh, I'm sorry, Jackson. I didn't see you there. I didn't see that you were there. I didn't mean to do that, Jackson. I'm sorry. All right. Let's look at PLTW. This is the only place I know of this secret Holy Grail metric. It's right here in the upper right corner. Performance for the quarter. And I'm trying to think if this is total return or just NAV return. The return up here, this is total return, and this is just NAV return. But anyway, it doesn't matter. But yeah, 48% NAV return is pretty dang good. But when I factored all the factors in together, and you considered risk and it's called the max factor, so it's Max's factor. It's not called the Joe factor, the Dave factor, whatever your name is, right? It's the max factor. It chooses stocks appropriate for my model portfolio. So those stocks that are in the top 10 will probably show up soon in the model portfolio, my brother-in-law's portfolio, and also with the other places where I manage high yield investments. So I wouldn't be at all surprised to see MSFY show up sometime soon, on the next rebalance, in other words, or PLTW, or, that's what I use the list for, to try to evaluate, because look over here, performance for the quarter. This one is only up 12. But when you factor in the dividends, and you factor in the average true range and the beta, which is the risk, max factor, I think this one's better all around, let's just say. Anyway, okay, so that's it for the max factor today. So we have a good hold on the max factor. I'm glad everything's working. I'm going to go back to line it up just the way it's supposed to be. I could have just sorted it by total return, and anyone can do that. You can always go look at the total return. Jay and all the fund managers always say total return's the true serum, and they're right. It is. I just wanted to make something that showed something beyond total return. Anyone can look at total return. But the problem with just buying the ones that have the highest total return are the problem is if trends don't persist. If you have a back and forth trending instead of a long trend, you're going to be getting in things at the high if trends don't persist. I mean, so that's the classic problem with buying something because of a trending signal. But anyway, you're looking for the trends to persist. All right, so that's it for the max factor. Let's go on to something else. Okay, model portfolio for the day. I was kind of disappointed to see I'm not doing as well as the benchmarks, but on days like this, it's going to be tough. There's not many days like this also. But my model portfolio is geared for sideways days and down days to outperform. On days that the market's ripping, I'm not going to outperform. But I'm still up 40 basis points. Heck, I mean, that's not bad. You make 40 basis points a day. We were just talking about making 50 basis points a day. You double your money. 40 basis points a day is like a 90% return or something. And that's before compounding. So it's, it's pretty good. Anyway, ULTY is the one that's really helping me out the most. It's up 56 basis points. It's not up as much as just owning the SPY. On a day like today, just owning the SPY, is the thing. When you're doing something like ULTY, even though those are good stocks, you're, capping off part of your upside. So anyway, all right, that's great. LFGY is up 5 points. For me, it's up 5 points. It may be at more altogether. GDXY is costing me a little bit of money, and YQQ is as well. That's fine. These are the allocations of those funds. So the YQQ, for one thing, I have 14% of something that's inverse to the market. So that's one reason on a big up day, I'm not gonna outperform, but I'll outperform on down days for sure because of that. But and also the gold allocation helps me sometimes because it runs inverse to the market. So I do have a little AMD left because it's just fractional. Now I wish I would have kept it. That darn thing's going up 5% every day. I'm just joking. All right. Let's get ourselves in the middle of some other stuff. How about that? Let's see who all's here. Let's say hi to Ethan. Hey, Ethan, I was just saying that you asked me about OARC yesterday, and I have no idea about OARC. I'm sorry, Jax. I just kicked Jax again. I'm sorry, Jackson. I didn't mean to do that. Okay, I'll take off my shoes. So at least if I do that, it doesn't hurt as bad. Okay. All right. Hey, good morning, SB. Anyway, good morning, guys. Thanks for being here. I appreciate all of you guys. All right. Let's see what else. Let's look at some trades now. And I left them up, all the ones we were talking about last night. Oh, that's right, because we were on that I did late night with Max and Jax. Then I did the announcement I was going to New York. I think I may have done 3 videos yesterday. Then I have a pre-recorded one, or did I announce the? I don't know. Anyway. Oh yeah. So we were talking about ARC. Because that's right. We were talking about all the call skew and stuff. And these were just all trades that we were looking at, Planeteer. And yeah, this one was the one where SB texted me about this one where he's making like 46% or something. We were looking at so many of them. I mean, or maybe this was oh no, then after you guys left, I started getting really crazy. Or I was up late working on some other ideas, as you guys could see. But look at this one. This goes out a year. You make it 10% yield right away. It's not a good trade. I don't know what I was thinking, but it's an income trade, but it goes out a year in micro strategies. I forget what even all it was selling a put to pay for a fly, an out on the money directional fly. So I was just trying to see how much buffer I could get. So this trade could go wrong, but MicroStrategies would have to drop more than 35%. I was trying to, but then you have full exposure to the downside after that, all the way to zero. But you have a 35% buffer. You get 10% of your money back right away. It costs $25,000 to put the trade on, but you get $2,500 back right away. 72% chance of profit. But the reason I said don't do it, I don't know what it was. I was up late. I was just looking at it. But I wouldn't want this trade because you type your money for a year and you have no upside to MicroStrategies. That's why I invented the 3-leg or whatever. I would do shorter term and do trades with some upside. This gives you, it's the equivalent of 28 shares of stock. But in other words, you wouldn't be pulling for MicroStrategies to go up anymore. But I mean, tactically, if you thought MicroStrategies had gone up about as high as it was going to go, maybe you go a little bit higher, not going to go much further. I guess this might be a tactic. But I was just being silly last night, seeing if a put an out of the money put to pay for an out of the money fly, and what kind of range you could lock in. It had like a 76% chance of profit. Anyway, all right. I just don't like that it goes out so far. I wonder if we could do the same thing in a month time frame or something, and that'd be more like something I'd like. But anyway, all right. Well, anyway, I was just being silly. Let's see what's in the save trade. There's really nothing going on in save trades or anything. What are you guys trading this week? What Ethan said, Planet PLTW. Well, I mean, I don't even remember some of these. Melly. Oh yeah. I was looking at Melly because it's in Alti. Convexity spread, bearish play for next Friday. I don't even remember what it was. It has 4 days until, and it's still up somehow. I don't know how it's still up with the market ripping. Let's see what the play, let's see what it was. Oh, and that's why, because it has a buffer. It has a little buffer, but it went through, it's getting ready to go through its buffer. It's only $100 loss though. So anyway, yeah, that's what it was. I remember that trade. I was showing it if the market, well, but no, this is the market keeps going up though. Okay, well, this one might still be good. This one goes out to next Friday, but you're really looking on this one. Basically, that's what it looks like on. That's what it looks like next Wednesday. That's why I called it convexity. There's convexity between the second and third standard deviation as the slope gets steeper. But I was just trying to make a cheap way to that one. I don't know if anyone did that. I certainly didn't do that. But that one is probably going to be good. We'll see. I may start doing so. I mean, I just discovered that the other day. I may start doing trades like this tactically. I was just trying to find a way to add upside as cheap as possible. That's why I called it convexity spread. All right. What do you guys want to talk about? You guys probably don't want to talk about convexity spread. Hey, retire on dividends. What's going on? Yeah, pigs get eaten, slogs get hoddered. Hogs get slaughtered. Slogs get hoddered. All right, this is what I want to find out. Trading information. You did 10 spreads on MicroStrategies and 8 on Planeteer. All right, well, that's just wonderful. Let's bring up the MicroStrategies chart. All right, here we have it. The MicroStrategies chart is only a 30-minute chart, which actually making a wedge. So the atomic wedgie pattern right there. You guys familiar with the atomic wedgie pattern? Well, that's it right there. Anyway, it's a pattern of indecision, and it just says go with the next breakout. Go with the breakout and then monitor for continuation is what it really says. But yeah, this is awesome. I mean, ES is up 2%. I mean, this is freaking incredible. Okay, well, anyway, so MicroStrategies, though, looks good. Let's look at PLTR. I mean, as far as getting in, at least you got in after a pullback SB. I mean, MicroStrategy's definitely been pulling back. Now, that not so the case on PLTR, but one of them's a trend play and one of them's a pullback play, right? Now, that chart's incredible. That chart is incredible. That thing's on fire. How do I not have PLTY? PLTY is PLTY. I'm always telling people, hey, what price the stock trades at's irrelevant. It doesn't matter if it's 50 cents or $500. It's still, it's still just as hard for a $500 stock as a 50-cent stock is to double in theory. And my friends always disagree with me on that. But I didn't get, but follow my own advice when I was doing the model portfolio or when I was allocating with that Tasty Trade account and I was trying to spend that money or I was trying to invest the money that my brother-in-law told me to invest. I looked at PLTY and it was like $60 because it just started at 50, I think, and it was already at 63. And I was like, damn, you know, I know it's a good one, but $63, I just won't get very many shares. You know, so I'm going to go down here and get AMDY or NVDY or one of the ones that's cheaper because I get more shares. But it's irrelevant. So I tell people advice. I need to tell those friends that I told that advice to, because they're always giving me shit about that. Oh, you aren't right about that. You aren't right. But we always argue about that. But their argument is it was easier to make money 10 years ago. They think it's easier for the SPY to go from 300 to 600 than it is for the SPY to go from 600 to 1,000. Or what they really think is the guys in the 80s had all the luck because they could have bought the SPY at $3. Or SPY didn't come out until like 96 or something, I think. 92, I think. But you get my point. But it's relative. But I'm going to stick my story. Money does not matter in the market. It's, you know, splits, reverse splits, none of that stuff matters, and people just don't understand it. But it's psychological, like I say. But it's funny to see it happen to me. That, you know, and I don't even take my own advice. And look what it did, and it cost me dearly. I should have bought PLTY off the get-go instead of AMDY or NVDY. And I needed another stock like that. And I was looking for one. And the reason I didn't is because it was $63. How silly is that? That's stupid. Now it's still at about $69, but still that would have been a great buy because you got all those dividends. Let's see if this is before or after. Let's see if this is, let's look at the settings here. Oh, that's not even adjusted for dividends. Okay, so that's just the true price. Yeah. So that's what I was telling you. I could have bought it for 63 back here. It's still 69 today. But then, of course, adjusted for dividends, it's off the chart. It seems like every market has one stock you have to own. In the 90s, like I've talked about before with you guys, it was really big pharma stocks in biotech and or maybe Intel and Dell was the one stock. But every market has one stock. You just got to, I think it may be PLTR on this one. In the Biden market, the last market, it was NVIDIA. It was Apple for years, and then it was NVIDIA, and now I think it's Palantir. But, you know, the one stock that just everyone piles into regardless of price, you know, that just doesn't seem to make any sense. But you could also look at MSTR kind of in that category. But you guys know what I'm talking about, right? All right. Hey, SB, see you later. Have a good one. All right. Max add PLTR to growth for the portfolio. Yeah, I probably need to. My portfolio doesn't have a growth mandate. It has an income mandate. So, but I need to add PLTY so I get some growth and some income, right? Anyway, all right. Well, there's only 4 of you guys here. Let's get out of here and go trade for a while. I'll come back about 2:30. How about that? And we'll talk at that time. How's that sound? Guys, thanks for being here. Got all caught up, and I will see you at 2:30 if I don't see you in Discord sooner. See ya.